Yeah, I think 2024, the end of this cycle, I think it should be somewhere in the 100 to 150,000 range based off of where we're at. However, if Trump were to win and enact those policies, I think we get to the upper range of that, which could be 400,000. So we'll know that obviously by November. Longer term, though, I think, I talk about often that, it's very unclear in the short term. It's much clearer when you think about the long term. So I would say that, I think $1 million Bitcoin by 2030 is in play. And so really we're in the situation where all roads lead to more government printing and more inflation. And so while everybody is predicting this big crash, I've been sort of on the opposite side for about a year making videos saying that there's just no crash coming.
Moss begins by addressing the potential price targets for Bitcoin by the end of 2024. He suggests that the price could range from $100,000 to $400,000. with the exact figure heavily influenced by the results of the upcoming US elections. According to Moss, if Donald Trump or Robert F. Kennedy Jr. were to win the presidency, we could see Bitcoin reaching the upper end of this range. In contrast, a win for Kamala Harris or another Democratic candidate could result in a more bearish outcome, potentially keeping Bitcoin at the lower end of the spectrum. Moss emphasizes that the political climate will play a crucial role in determining Bitcoin's trajectory. Moss also takes a longer-term view, suggesting that Bitcoin could reach $1 million by 2030. He bases this prediction on Bitcoin's sensitivity to global liquidity, a concept he explains in detail. Moss points out that Bitcoin has historically responded more aggressively to changes in global liquidity than traditional assets like the S&P 500 or gold. For example, while the S&P 500 has a sensitivity ratio of 1 with global liquidity, gold has a ratio of 1.49, and Bitcoin has an even more impressive ratio of 8.95, This means that for every 10% increase in global liquidity, Bitcoin's price could potentially rise by 90%. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Yeah, I think 2024, the end of this cycle, I think it should be somewhere in the 100 to 150,000 range based off of where we're at. However, if Trump were to win and enact those policies, I think we get to the upper range of that, which could be 400,000. So we'll know that obviously by November. Things could drastically change. If the Harris administration wins, then we might undershoot that target. So I think all eyes are going to be what happens with this election. If Harris comes in, it could be, again, underwhelming that number. It could be extremely bearish. And if Trump wins or FK wins, it would be extremely bullish. So I think somewhere in that 100,000 to 400,000 range, as I know that's a big number. But I think we'll have to wait and see what happens with the election. Longer term, though, I think, I talk about often that, it's very unclear in the short term. It's much clearer when you think about the long term. So I would say that, I think $1 million Bitcoin by 2030 is in play. That's 2 more cycles, basically. We'll finish this cycle plus 1 more 4-year cycle. I think that number's in play specifically when you look at what's expected to happen with global liquidity and the sensitivity ratio that Bitcoin moves on that global liquidity. I don't think it was that bullish. I think it might not be bullish enough. Wow. So if we break that down, I didn't prepare the talking points, so I don't have the exact amounts in front of me right now. However, if we break it down, he sort of charted out sort of the bear case, the mid case, and the bull case. So he gave sort of 3 price predictions. And basically what he did is he said, hey, look, Bitcoin has averaged a 150% compounded annual growth rate. We don't believe that's going to continue moving forward. So what will it continue moving forward? And that's how he got sort of the 3 cases. Basically, the bear case is that it moves up faster than the S&P 500. I think it moves up at twice the rate. Now, is that reasonable to think that it could move at twice the rate of the S&P 500? Well, pretty much any of the big tech companies do. So, that's one case. We also know that, as I mentioned earlier about houses and the S&P 500 moving up at the rate of global liquidity. So we know that the S&P 500 basically moves up exactly like the global liquidity. However, gold has a sensitivity ratio of 1.49. So that means gold moves up For every 10% rise in liquidity, gold goes up by 14%. Bitcoin has a 8.95 sensitivity, which means for every 10% rise in liquidity, that Bitcoin goes up by 90%. So for every 10% raise in liquidity, S&P 500 goes up by 10%. But Bitcoin goes up by 90%. So his bear case was that it would just double their performance of the S&P 500, which is, I think, is way too extremely bearish, in my opinion. So then we just predict. I mean, we can look at the Congressional Budget Office. The CBO projects what they think the debt levels and the deficit levels will be by 2050. Saylor, I think said 2045, which is 21 years for the 21 million Bitcoin. But we can just see what the CBO projects for the debt levels and the deficit levels to be by 2050. And if Bitcoin continues to move at a sensitivity ratio, at least of 2 times the S&P 500, right now it's at 9, then we will easily surpass Michael Saylor's numbers. I think it moves even faster than that, but I don't think when you break down the math, it's not that crazy. Now, if you wanted to use that same number, how much are the median U.S. homes in 2045? Right. How much is a gallon of gas in 2045? And a lot of people are going to be very shocked if they do that math. On to the macro outlook. I have been openly calling for higher inflation. I'm an inflation bull. I believe the rest of this decade is extremely inflationary. They can hide it in CPI, but I look back to the original definition of inflation, which is the expansion of the monetary supply, the monetary base. What we can see is that over about the last decade, the monetary base, the rate of debasement has been about 8%. However, since about 2019, it's been about 10%. So you take the monetary debasement plus the rate of inflation, 3 to 4%, et cetera, we're really at about 12%. That's the hurdle rate as an investor that we need to beat. That's why, even though you see, your S&P 500 going up, you're not getting more rich, right? You can't buy more goods and services. And so that's sort of the outlook. I'm an inflation bull. We have the world breaking apart. The BRICS nations are challenging. Supply chains are breaking down. And now the U.S. is in this sort of re-onshoring, nearshoring sort of move, which means prices are going up. We can look at them across the board. We can see that there's lots of calls to print more money. The G7 now wants to spend about $10 trillion to sort of rearm the military. Janet Yellen wants to spend $78 trillion to sort of transition this green economy. And so it's going to be continuing to see more and more inflation. That's the macro outlook. But on another level, we can look at lots of indicators. Specifically, one of my good buddies loves to talk about the yield curve control and how that spells out a recession. But in my opinion, and you've heard this many times, and I just agree with them, that the Fed between the rock and the hard place, so to speak, there's no way out but inflation. And so if we were to have a recession, that just means more inflation. I made a video talking about how the Fed cannot, or the government cannot afford a recession. So typically when we see a recession, we see tax receipts drop by somewhere between 12 to 15%. They can't afford that. They're already running $2.5 trillion deficits. How do they afford that? And so really we're in the situation where all roads lead to more government printing and more inflation. And so while everybody's predicting this big crash, I've been sort of on the opposite side for about a year, making videos saying that there's just no crash coming.
The discussion then turns to the Federal Reserve and its limited options in the face of these challenges. Moss argues that the Fed is stuck between a rock and a hard place, with no way out but to continue printing money and stoking inflation. He explains that if the U.S. were to enter a recession, tax receipts would drop significantly, exacerbating the already massive deficits. This would force the government to print even more money, leading to further inflation. Moss believes that despite widespread predictions of a major market crash, the reality is that the Fed cannot allow such a crash to occur and will instead opt for more inflationary policies. Moss also addresses the topic of government-held Bitcoin, particularly the 200,000 Bitcoin currently held by the Department of Justice. He speculates that there is a power struggle within the U.S. government over how to handle these assets. Kamala Harris, he notes, has been vocal about the need for a reset with the crypto industry, while other political figures like RFK Jr. and Trump have proposed using these Bitcoin holdings strategically. Moss suggests that the current administration's efforts to sell off these Bitcoin holdings may be an attempt to remove this issue from the political debate.
This is a point that we should hit on. I'll put a pin in it. We can come back to it. But they want to take the 200,000 plus Bitcoin that are already sort of in the government's books on the Department of Justice and move it over to the Treasury. Now, we'll put a pin in this, but Kamala Harris, who was invited to come to the Bitcoin conference and denied it, but then put out a press release saying that it was time for a reset with the crypto industry. We had, I think it was 16 high-ranking DNC members wrote a letter to the Harris campaign saying, hey, we need to fix this. Like, we're going to lose big time. So she says we need to have a reset. Well, as soon as the announcement of RFK and Trump come out and Loomis saying that we want to move that 200,000 over, what does the Harris regime do? Looks like they're starting to sell off all the Bitcoin. Let's just remove that talking point. And the reason why I wanted to bring that up, and we can dig deeper into that, is because you asked, why wouldn't we just print the money to do this? And the reason why is because the party, the administration that's in power right now, is doing everything in their power to shut it down and end it. So why would they want to buy something that they're trying to get rid of? Now, to your point, if Trump or RFK gets in, why wouldn't they print money? Well, they would, and they both announced it, and they both laid out a strategic plan as well as the amounts and the exact mechanism of how that would work. I think there's a couple of reasons why. First one is like probably the most obvious, and that is that the government is not a monolith, and it's not a dictatorship or a monarchy. And so it's not like Trump or anybody else for that matter could come in unilaterally and say, let's just print 5 trillion or whatever it is, 2 trillion, and just go buy whatever we need. Like, you can't really just do that. So to get a $1 trillion bill through to do something like that literally takes an act of Congress, like literally, right? So if we look at like the stimulus bills that went through COVID, et cetera, right? That's like a big deal to get something like that through. And because the government's not a monolith, I don't think it's going to be very easy to get something like that through. I don't think everybody agrees with the future of Bitcoin, number one. Number two, I think it's also what it would signal to the world, right? The U.S. needs to sort of play this dance. This is a bigger conversation than we can get into right now, I think. But we can see, we mentioned earlier, sort of the BRICS nations, China, Russia, et cetera, moving to this gold standard. And I believe that the U.S. sees that happening. And the U.S. sort of has two choices. Either one, they need to pivot in front of that move or get caught blindsided by it. So the government is like trying to like balance like keeping the dollar there. We still need people to buy the treasuries. We still want that dollar to stay there. But at the same time, how do we pivot into this new system and be ready for it, be in front of it without losing? And so there's like this delicate balancing act that they have to play. And to your point, if they were just to go print $1 trillion and go buy as much Bitcoin as they can, I think that would send a really dangerous signal to the market. And the government, I don't think, would approve that either. If you think about the balance of gold and Bitcoin, for example, right? So you mentioned the government's strategic gold reserve. We have gold on the balance sheet. All the nations of the world use gold and hold gold. And now we see central banks buying more gold than any time in history. But that hasn't threatened the dollar. The dollar is still the currency of the world. Treasury is still a reserve asset. And so we can have this world where Bitcoin is this reserve asset, where Bitcoin is maybe potentially someday recognized by the BIS as a Basel asset that could be used to collateralize central banks without necessarily threatening currencies. Now, eventually, of course it does eventually, but we could have that world for quite a while.
Moss discusses the delicate balance the U.S. must strike between maintaining the dollar's dominance while also preparing for a potential shift to a new financial system that includes Bitcoin. He argues that while Bitcoin could eventually challenge the dollar's supremacy, there is still a window where both assets can coexist, much like gold and the dollar have for decades. Moss concludes by discussing the challenges of implementing large-scale government spending programs, such as those proposed by Trump or RFK Jr. to buy Bitcoin. He explains that the U.S. government is not a monolith and that passing such measures would require significant legislative effort. Additionally, Moss warns that openly embracing Bitcoin on a large scale could send dangerous signals to the global market, potentially destabilizing the dollar's position. Please like and subscribe my channel.